Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This has been a very interesting week. Not only was it interesting, but it was historic. As you can see from this particular chart of the Qs, which is basically the ETF that represents the tech sector, we've had a dramatic sell-off. Now, if you were surprised by this, then you did not listen to the alert that I put out last week. And let me review that for you, because for the past couple of weeks, I've been pointing out all of the signals that have led to the sell-off. Now, even I didn't think that we'd have such a dramatic sell-off, but I was absolutely convinced that we would sell off. And I'm going to show that to you right now. As we recap the volume, back here, I said, and this was 2 weeks ago, I said that the volume was steadily dropping as the price of the Qs had gone higher. Now that in and of itself is a sign of weakness, because that tells us that the buyers was slowing down. The second point that I pointed out to everyone here was this divergence in the CCI. Let me explain that to you for those who missed that report. When you see higher highs forming on the technical chart, but you see lower highs forming on the CCI, that is one of the most extreme sell signals that you're going to get. And I did point that out to you as we drew this line right here as my forecast. I said we would most likely go down to fill this gap, hence the reason why I drew this horizontal line, because 80% of the time gaps fill. And then once the gap fills, there's an 80% chance that the market will reverse from that point. Remember that when I point out the gaps that we currently have filling on the charts. Now, let me erase everything that we have here on the chart as far as forecasting lines, and I'm going to start with a clean slate. Remember what I said about gaps. 80% of the time gaps fill. Well, look at that. This gap right here has filled today. Not only that, but you see this increase in volume right here? That's telling us that the sellers are fairly motivated. This is a pure reaction to fear. I have to say, and I'm sorry to say, that this coronavirus scare has now been politicized. So it seems as though every single news station out there is striking fear in the hearts of not just the investor community, but everyone around the world. Do I think that's an overreaction? Yes, I do. Personally, I'm not discounting this. Yes, I think it's a threat like anything else. But when you put things in perspective, the common flu has infected way more people. In the millions have been infected, with the death toll in the tens of thousands. This is now becoming the new scare. Now let me, again, put things in perspective for you. When we look at a chart, we are using the signals to not only remove or eliminate the fear from our decision-making process, but also we use the charts to identify buy and sell signals. Right here on the Qs, this is a long green candle. What does that mean? Well, it means that the market this morning gapped lower in the tech sector. But by the end of the day, the buyers came in and rallied it off the lows. Let me show you exactly what I mean when I go to a minute-by-minute chart. We opened down here, trade a little bit lower, and then steadily throughout the day, we wound up on the highs. Okay, so that tells us that there's some bottom fishing coming on, and there are bargain hunters that are looking for new positions in the market. I would side with that side of the buy side, because I do believe there's a lot of opportunity out here. If you want more trade alerts and ideas for that, then go to our website and I'll give you some trade ideas. But right now, in this particular report, I'm going to point out the technical signals, again, to help ease the fear and get you focused on the opportunities that are out there. Remember what I said, 80% of the time after a gap fills, it reverses. So my forecast for the next 2 weeks, I'm not just going to go out for next week, I'm going to go out 2 weeks. I think we are going to start to move up towards this gap now, which will be a gap fill target. Remember, this down gap is now going to act as a price magnet. You see that? Now we've had a long and very dramatic downward turn here that has also caused the price action to move far below that moving average. that's called the rubber band effect. As the stock or any market moves away from that moving average, it has a tendency to snap back towards the moving average, just like a rubber band would snap back once it's stretched. All right, so that's signal number 2 that we're way oversold, is that rubber band being stretched. On Monday and possibly Tuesday, I am going to forecast that we are going to have lower volume. Let me zoom in here for you. I think the volume bars are going to start to drop. Why is that significant? Because when the volume bars are dropping on the way down, it's telling us that the sellers are running out of that momentum. And I think here we'll have the whole weekend really to digest this news, maybe ground some people in the facts and help them understand how this is not a time to panic. It's time to think, be cautious, wash your hands. Of course, we are going to take those precautions, but there's no need to panic right here. Moving down to these oscillators, take a look at this. The stochastics has bottomed out right there and is now starting to turn up, even though we had a down day today. Look at that. So the stochastics is moving up. I'm going to forecast that that's going to continue to move up and eventually cross with a buy signal. And look at that. The CCI has reached a low right here, and it too is also starting to move up. I believe next week we're going to see that continue to move up and cross with a buy signal, because when the CCI, let me zoom in here for you with my magnifying glass, when the CCI moves up and crosses over this green line, which is the minus 100 level, that's when the technical buyers start to move in, and they move out of cash and into new positions. So that will most likely help the Qs moving into next week. Now let's take a look at the Russell 2000, a more broad-based index right here, ticker symbol RUT. Look at that. Isn't that incredible? That's a rock falling out of the sky. But look at this. Again, my forecast right here was that we would move lower, with the end of the line being my target price. We blew through that, of course. And this horizontal line was my target for the gap fill right there. Now, as I back out of this, now again, I'm going to erase these lines because we hit all those targets. Let me explain this to you one step at a time. We have a long stretch of red. Again, panic selling here. 1, 2, 3, 4, 5, 6 very long red candles in a row. That's known as a stale red light. That's bullish now. We have a long shadow under this candle because, again, the Russell 2000 towards the end of the day started rallying off the lows. Now, why is that low so significant? Well, I'm going to have to take a step back now. Take a look at the weekly chart so you can understand what's going on here. This is a major support level for the Russell 2000. It's going back 3 years. You can see how this level of support has been tested 3 times since April of 2019, and now we're getting ready for a bounce. Why do I say we're going to bounce next week and the weeks that follow? Because all of the signals are telling me. I'm going to go out. I don't think we're going to be this extreme and go right back where we were, but I am going to put a pretty aggressive target, with the end of that line being my target for the next 2.5 weeks. Right now, look at this. Stochastics turning up off of the lows for the year. It's the lowest it's been, and it's starting to hinge up. Look at the CCI. Every single time the CCI has gotten to that low or close to that low, every single time, look at this, we have rallied after that. Look, here's a low, and believe it or not, the CCI leads price action. It's as close to a leading indicator as you're going to get, with volume being the most important leading indicator. But I do believe that we're going to see some positive action in the Russell 2000. Now, moving right along, we look at the diamonds. Now, this is the Dow Jones Industrial Average. This report's going to be a little bit longer than usual for obvious reasons, but I think it's very important that I show you what's happening here as well. This was my forecast. I said that we would move lower. On this high, this weekend, when I started this report right here, I again pointed out this negative divergence in the CCI. Again, repeating myself, but for good reason. When we have a higher high showing on the price action, but a lower high on the CCI right there, that is, again, an extremely powerful sell signal. So at that time, We were moving our option traders who subscribe to our trade alert service to close positions. We had equity traders closing their positions for profits, and we're loaded with cash right now. Now, why is this a good thing for those who are in cash and not panicking? Because this is a shopping spree about to happen next week. And I can tell you that I'm not the only one that's thinking this way. There's a lot of people that have been in touch with me who are ready to buy. They're asking me, do I pull the trigger just yet? Well, this report is giving them some clues as to when to actually pull that trigger. Here's the diamonds. Again, look at that. Big long shadow underneath that candle. That tells us that the buyers rallied back on the close. We closed very close for today's high. It's pretty amazing, isn't it? Now that we've hit these targets, I'm going to erase these lines for you and draw new targets. Well, remember, 80% of the time, gaps fill. I'm going to go so far to say that the first gap target that I'm going to set, you can see there's a gap here, but I think next week we're going to rally right back up to fill this gap right here, maybe pull back a little bit before going higher, but ultimately I think we're going to get back on track and get very close to this gap fill point. What I am looking for next week, see this big volume spike right here? I am looking for a drop in volume on Monday and a lower volume drop on Tuesday. I think the volume is going to start trending lower. The stochastics is starting to move up right here. Eventually, I believe that will cross with a buy signal. And look at that CCI pivoting perfectly off the lows. I think that too will create a buy signal and getting the rest of those people who are cash heavy into the market. All right, so that's the diamonds. One other thing I want to point out with the diamonds. Look at this monthly chart. You see this? Here's a low back in the end of 2008, 2009, when that big sell-off took place. We can draw some fan lines here. See this? Now watch this. When you're drawing a fan line, what you do is you take the second or the last line or support level in that trend line, and you start your new trend line. Look at that. We are right at an area where we're at a level of support on this fan line, and that's only going to add to the buying that starts to come into the market at that level. Let's take a look at the S&P. That's SPY, the ETF for the spiders. This beautiful green candle right here. Now that green candle, again, is showing a lower high and a lower low from yesterday and the previous days. But this big volume spike here is green. Now, years ago, John Murphy, he was the technical analyst for CNBC, he would call this a selling climax. That's usually when we have capitulation or fear, again, working its way into the market. And a lot of times, these become opportunities for people who are looking to buy. Check this out. I'm going to go back and look at this over a 3-year period so you can really get your eyeball on this. Take a look at the volume spikes. Now, this is going back 3 years. Every single time we had volume at this level or close to that level, every single time, look at this, that became a huge buying opportunity for those who captured their profits from other people fearing and capitulating. Look at this. Now, again, those selling climaxes usually occur on super high volume. This is a weekly chart. Again, what I also want to point out to you is that we are right at a major support level for the S&P 500. Look at the CCI down here. It's the third lowest level in 3 years. Again, with each lower level here becoming a buying area for opportunity. All right, so keep that in mind. The CCI is very important that you take a look at that because it creates entry points for us to be able to ease into the market. Am I telling you just take all of your cash and just go right into the market and jump in on Monday morning? No. But if you do have cash, you could scale in, buy a little bit maybe on Monday. If it goes up, you could buy a little bit more. If it goes down, you could buy a little bit more because you did not exhaust your buying power. Again, with that type of strategy of scaling in, either scaling down or scaling up, you will also incorporate a good risk management plan. We talk about that all the time. Last open house Q&A session that we had, I talked about using the 1% rule for managing risk. Go to our website, click on the video tab, look at the video that says 1% rule, and follow it. It's a quick 7-minute lesson on how to use risk management to help ease your fear and make a better decision in the market. Okay, now finally, let me erase all of these lines right here. I'm going to redraw my support level down here so you could see where the bounce will most likely occur. There is a wide divergence from this moving average. I think we're going to start to move up right here. I think we're going to see a 50% retracement of this move over the next 2 weeks. I also think the stochastics is going to continue to move up. I think the CCI is going to move up and cross with a buy signal. Again, when that blue line right there, let me magnify that for you. When that blue line crosses the green line, you're going to have more technical traders starting to jump in to the market. Another thing I want to point out is today, right here, see this little gap? Again, I have to keep zooming in because it's so small. That gap has now filled. 80% of the time, gaps fill. Again, second part of that rule, 80% of the time after gaps fill, prices tend to reverse. That's exactly what I'm expecting right here. Now let's take a look at the VIX, and I'm going to wrap up with this one. Look at that volatility index, folks. This is absolutely incredible. It's like a SpaceX rocket took off from the launch pad. And look at this. This is an inverted hammer. That's very bearish. That's a good sign for those who are looking to buy, because a bearish VIX is bullish for the S&P. Remember, they're inversely related. My target was that we would move up to test this resistance. We blew through that target, and now there's a gap below the market. Now, stick with me here. Again, I know this is a longer report, but I'm going to show you something right here. It's pretty amazing. I'm going to go back 20 years. The VIX is not a stock. It's an oscillating index. The average highs, with the exception of this big spike here and the spike that we saw in 2008, look at these average highs right here. Isn't that incredible? That is absolutely incredible. We are right at that resistance high. As I zoom back into the weekly chart, you're going to see there's a huge gap right there. See that gap on the weekly chart. Now here's I'll make a bold statement, and I will again, and I've done this before, I will once again stake my reputation on the fact that that gap will fill. I'm going to draw a line right there. I'm telling you, 100% of the gaps on the VIX, especially the weekly charts, 100% of the gaps they've filled. Since the VIX has been around, since the very first day the VIX was introduced, all gaps, 100% of the gaps fill. Now, let's go back to the daily chart so I could zoom in for you a little bit more. What's my forecast on the VIX? I'm going to go out 3 weeks. How about that? I'm going to go out 3 weeks and tell you the VIX is going to pull back and most likely move to fill that gap right there. All the oscillators are pointing lower. The stochastics right here, hinging lower. The CCI right there, as I zoom in, hinging lower. I think the CCI is going to start moving lower to cross with a sell signal, and that will again add some downside pressure to the VIX, which in turn is bullish for the S&P. Let me encourage you to turn off your television sets, turn off the radio, and turn on your charts. Turn on your computer to look at the price action, because that will help you remove the emotion from this process and help you make much better decisions. I hope you enjoyed this week's report. Looking forward to connecting with you. Be sure to visit the Market Guys, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.